Hello, Jeff Green here, and I've had a lot of questions on how to invest in AI stocks. And AI is filled with some big companies and some very tiny companies on the forefront of AI. And unless you have a lot of knowledge in the industry and background about which companies might progress forward in this space, you might spend a lot of time selecting stocks. Now, you can pick the absolute front runners, which is NVIDIA and Microsoft. And frankly, some of those big companies are owned by these two ETFs. And I want to talk about two ETFs that are my favorite when it comes to AI stocks. And they both have a little bit different strategies. And let's just walk through them here a little bit. So on the left side of this line is AIQ, right? So this is the AIQ, and here is BOTZ. Now there's a little bit difference in what they focus on. The left side of this chart, like this is the weekly chart here, and then this is the daily chart on the right, and then the weekly chart of BOTZ and the daily chart of BOTZ is here on the far right. So there's a couple of major differences between these two ETFs. And AIQ, which is on the left here, is powered by AI. They actually use an AI platform to find out which stocks they would like to invest in. They look at things like profitability, price trend, where they are in the AI field and that sort of stuff. And they're continuously evaluated. I'm not exactly sure how frequently they change their listings, but I have a listing on both these holdings that go back to January. But they're continually evaluated, and they focus on actual AI and machine learning. Now, BOTZ is a little bit different. BOTZ is more actively managed by human beings. They focus on robotics and AI, and they're relatively fixed. They don't change that much. I think they change maybe once a quarter or once a half or something like that. But the thing is that for me, I don't really care what they focus on so much. What I like to do is figure out what's going on in the price trend. So let's take a look at AI. Let's take a look at these two charts over here. On the weekly chart, we had this big high back in, let's see, late 2021. Then it came down to what I term technically cheap, and it found a bottom here in the mid part of 2022 to 2023, and then it's been taken off as fast as it came down, as you could see here. So if you draw, what I did was on the monthly chart, I drew a trend line. Here's the bottom trend line, here's the upper trend line, here's the most recent high, and you can see even on the weekly chart and the daily chart, it has significantly broken above that last high. You can see it had a couple of headaches getting through this level, but once it's through, I think this was Friday's trading, it really shot up. It shot up on increased volume. The MACD is very positive. The unbalanced volume, I'm sorry, this is volume, and the unbalanced volume is significantly increasing, showing increasing demand for the stock or for this ETF. And of course, the ADX is at 23 on the daily basis, 25 being a very strong uptrend. So in my point of view, AIQ has a little less room to hit the upper trend line than BOTZ. So let's take a look at BOTZ. So BOTZ on the left, there's a weekly chart here, and then the daily chart is on the right. So the same sort of layout. This goes back on the weekly chart, and you see the same sort of high here and the same sort of time period that BOTZ hit a high, right down in this time frame here. I'm not sure I want to leave that line on there. It's confusing. And you also see the same sort of lower trend line, technically cheap here and technically expensive here. This was the most recent high that I drew on, and you can see on the daily chart that BOTZ has significantly broken through that overhead resistance. Not so much increasing volume as AIQ, but certainly a little bit more volume. MACD's pointing up, and the on-balance volume is significantly increasing, as you can see here. And again, an ADX of about 23. 25 is a strong uptrend, so anything near 25 is going to help you. But what amazes me on BOTZ is look at the institutional demand on the on-balance volume. It's just going out of sight. So as compared to AIQ, I think there is a little bit more room for BOTZ to get up to its technically expensive area. that's about $10, so that's about 30%. And let's see, 33 to about 40, that's about what, 20-25% to get up to. It's technically expensive. So in my view, I actually own both these ETFs. You have to be careful that you have to know that there are similar holdings in each one. But in my book, I think they're both powerfully uptrending in a brand new industry. There's just going to be a ton of money made. So I hope this helps. Please like and subscribe this video, and you'll get notifications of more useful stuff. I hope you have a great day. Talk to you later. Bye-bye.